Hey everybody, Shane Cast here with Keller Williams and Stanton Residential. Just wanted to jump into a little bit of a market update for you. It is August 8th, 2026. Last week rates were at a 1-year high all the way up to about 7%. The main point of this right now, the main key takeaway here is that rates have pulled back in this last week. They're down to around 6.74 as of yesterday, Friday. However, of course, they remain pretty elevated. So if you want to be successful in this market, you need an active strategy rather than just waiting for dramatic rate drops. I don't think that's coming anytime soon. The main driver behind this change this week was easing oil prices, some geopolitical shifts that have reduced kind of the inflation pressure right now. Driver number two, lower than expected payroll employment data. So that jobs report came out and it wasn't very good, which that impacts rates in a positive way. So bottom line, serious buyers are leveraging creative financing tools today. We'll get into a little bit of what that means in some of these next couple of slides. So here's where we're at currently and the market context. So 30-year fixed 6.74, 15-year fixed 6.25. Again, this is as of yesterday, Friday, August 7th. 30-year FHA 6.28. So national market signals, we're down about 5.35% on pending home sales, down about 2% on existing home sales. Buyers are highly cautious and price sensitive across all price points in Central Oregon. So if you're a seller, it's a good thing to be aware of. If you're a buyer, you've got a lot of choices. How active buyers are winning today. So I mentioned that in the very beginning. This is really important for sellers to pay attention to, but if you're a buyer, this is what I'm kind of recommending right now. Look at some of the tools that are available to you. Adjustable rate mortgages are coming back, utilizing like a 5.6 or 7.6 ARM to lower those initial payments while planning for a future refi. That's something I see a lot of people doing right now to kind of soften the blow right now. Eventually, I expect this market to open back up. And if you have a long-term plan in place, an ARM can be a good way to do it. Another thing I'm seeing a lot of buyers do is go new construction. Some people don't like new construction, but if you're open to that, in Bend, for example, the Stevens Ranch development over by the new library is offering rates as low as about 4% last I checked. So meaning you could buy like a $550,000 house there and have the same payments as like a low 400s house in Redmond with those low rates. So it really does open up your purchasing power to consider some of those. Other builders do similar things. Seller rate credits, negotiating seller concessions to buy down your rate is another thing you can do. First-time buyers, there are programs out there that offer lower interest rates as well. Got a lot of information about that in some of my previous videos. But right now, I believe the Oregon bond rate is in the low sixes or maybe even as low as 5.625. But that varies by daily. So checking out those, don't just focus on the headline rates. There's always ways that you can get that payment down a little bit by taking advantage of some of the other products that are out there. Seller playbook and pricing strategies. So I'm going to cover this a lot more in depth in a couple of future videos, so stay tuned on that. But the main thing to pay attention to is you need to launch accurately on day one. Don't fall for the trap of, well, let's list it a little higher and adjust down because we can always lower the price. That is, all the stale listings that are ultimately selling below the true market value. That's what they probably did on day one. They started higher for whatever reason, and they're taking a lot longer to sell. And ultimately, you have to reduce the price probably lower than where you would have been on day one if you had just priced it accurately and sold it quickly. There's still the tale of two markets is still very true right now. About 40% of the listings in the Central Oregon area are selling within the first 2 weeks. Those are the ones that are priced right on day one. The rest of them tend to linger for a long time. So really just understanding where you fit within the market. Be open to offering concessions over, slashing your price. And then just kind of think about this with pricing, like the Coca-Cola stock lesson is something that I always talk to a lot of my sellers about. So if you bought Coca-Cola stock for $100 a few years ago, And right now the market is actively trading at 80. What is it worth today? It's worth $80, right? So you can't just build in your own expectations on pricing because you paid a certain amount for something that you should be able to get that when you sell it. That's a recipe for disaster in this market. Real estate works in the exact same way as the stock market. Homes are worth what active buyers in today's live market are willing to pay. So that about wraps it up. Just kind of give you a look where we're at today. Things I can do for you: custom equity analysis anytime you want to know what your house is worth right now. I'm a student of the market. Data-backed valuations are what I do. Strategic pricing and incentive design. So structuring listings with targeted seller concessions to directly appeal to rate-sensitive buyers. Talking strategically about the different ways that we can position you in this market. And for buyers, local lender partnerships. I have a lot of lenders that I partner with and can recommend people that can help you in the various scenarios that we discussed in the earlier slides. So that's about it for today. Let me know if you have any questions. Drop your comments in the comments here, or shoot me a text anytime at 503-810-2723, and we'll talk to you next time. Thanks.